The KL High Court has ordered former PM Datuk Seri Najib Razak to pay the Inland Revenue Board 1.69 billion ringgit in unpaid taxes. Judge Justice Datuk Ahmad Bachi allowed the taxman's application for a summary judgment today and also awarded 15,000 ringgit in cost to the IRB. A summary judgment is a judgment by the court without a full trial, where witnesses can be called to testify and be cross-examined. It is sought by plaintiffs in cases where they feel that whatever defence raised by the defendant would merely have the effect of delaying judgment. Ahmad held that when a notice of tax assessment from the IRB is served to taxpayers, they must pay the amount sought. And as everyone is equal before the law, he ruled that Najib must pay the sum as it is a debt to the government. Putrajaya filed the suit against Najib last June, seeking over 1.69 billion ringgit in unpaid taxes with an annual 5% interest rate beginning from the date of judgment. It claimed the former PM had failed to pay his income tax from 2011 to 2017 within the stipulated 30-day period after assessment notices were issued by the IRB. The PM's department, via the Economic Planning Unit, is reviewing the proposed sale of two Plantations subsidiaries. The plan to hive off Bumi Surya Ventures and Maju Warisan, which own 6,514 hectares of land to Tamako Plantations for 170 million ringgit, was announced in December 2019. However, the new PN government says there is a possibility that it might rule to cancel the sale, citing, among others, the low transaction price as opposed to market valuation. Deputy Minister in the PM's Department for Religious Affairs, Ahmad Marzuq Sha'ari, told Parliament today that the Valuation and Property Services Department and CH Williams had valued the two companies at 224 million ringgit to 280 million ringgit. Based on the review, he said the value of the proposed deal is 4,500 ringgit per hectare, which he deemed too cheap. He also suggested that loss-making TH Plantations restructure its debt rather than sell off its assets to stem the bleeding. He said this is because the bulk of the company's debt goes to parent Lembaga Tabung Haji and that the sale of assets will negatively impact its cash flow rather than improve it. Former Finance Minister Lim Guan Eng was summoned to the headquarters of the MACC today to give his statement with regard to its probe into the Penang Undersea Tunnel project. MACC Deputy Chief Commissioner for Operations, Datuk Ahmad Kusairi, told Bernama that Lim presented himself this afternoon and confirmed that he was called to assist investigations into the controversial 6.3 billion ringgit project, which was initiated during his tenure as Penang Chief Minister. The MACC reportedly reopened its probe following fresh leads. Recently, it questioned current Penang Chief Minister Chow Kon Yeow and other state exco members and arrested a former top officer of the Penang Port Commission. Investment Bank sees Airasia Group's passenger volume rebounding by 35% in FY21 after shrinking by some 50% in FY20. This as the global aviation sector recovers from the impact of the COVID-19 pandemic and related movement curbs. On the whole, though, the recovery of the air travel industry will be bumpy, given uncertainties surrounding the opening of borders. Investment Bank analysts said in a note today, airlines are struggling to plan their flight schedules to ensure that the seats are filled. This is because passengers now, on average, book their tickets only 0 to 3 days before departure, versus 20 days and more before the outbreak. Also not helping, the urgent need for airlines to recapitalize their balance sheet, given the massive losses they have suffered amid a collapse in air travel. There is also the question as to whether one airline would enjoy unfair advantages over other airlines, should it receive more generous government assistance compared with other carriers incorporated in other nations. The analysts maintain that AirAsia's key strategy of aggressively growing its top line to mitigate the high-cost structure arising from the recent aircraft sale and leaseback scheme has been thwarted by the collapse of the air travel market and an expected long and winding recovery road of the industry. Investment Bank has a sell call for AirAsia Group, with a target price of 41 cent versus its last closing price of 70.5 cent. Health supplement player Bioalpha Holdings has bagged a 5-year contract worth 3.5 billion renminbi, or about 2.1 billion ringgit, to supply ingredients for health food and nutritional meals to private and public sectors in China. Its wholly owned unit, Bioalpha Hong Kong, inked a partnership agreement with 2 Chinese partners, Guizhou Yuhexing Trading and Hainan Shifeng Fu Company. It also signed a supply contract agreement with Guizhou Yuhexing. Bioalpha Managing Director William Horn says the contract, which is subject to annual renewal, is expected to contribute 700 million renminbi or 426.7 million ringgit to the group's revenue per year. Its internal KPI is to achieve a gross margin of 3 to 5%. The first batch of supply is scheduled to kick off in September.